Welcome guys to yet another recap video with Mr. FXmosako. I hope everybody had a wonderful week ahead and y'all are profitable and y'all gained knowledge and read a couple of books. So before we start, I just want to inform you guys that I'm a technical trader. So there is fundamental traders and technical traders. I'm a technical trader whereby I use the chart here using horizontal lines, support and resistance levels, channels. That's what those are the terminologies you go into here, and breakouts, right? And also these are the pairs that I trade. I don't advise a lot of people to trade this much pairs, but because I've been trading long enough, I know which pairs to look at based on probability. The greater the probability, the more you would like to enter the trade, right? But for you start beginners, please make it three or two, just to make you understand the flow of the chart, what the chart does, so forth, so on. And this is the DXY. As most of my currencies, as you can see, they have a US dollar in it. US dollar, US dollar, US dollar, and yeah, the rest is just the indice, and it's the ZAR/JPY and EURJPY. But ZAR/JPY, I don't really trade it that much. But if you're new here, please do press the subscribe button and that notification button, and that like button, to be notified every time I do drop. And also I would love this content to reach a wider audience, so you liking it would really help me a lot. Let's get into it. So DXY, right? DXY helps me be able to see the strength of the dollar and be able to go to other pairs, like I said, and choose the direction based on what's happening here, right? So at the beginning of the week, price had already fallen, was falling, right? And I told myself that, okay, you see that price is here, right? This looks like a level, like a good level here, like a good support level. As you can see, there's reaction in the past. So we use the past to help us be able to see how the current possibilities can be, right? And looking at the past, this area was respected, right? So knowing that, okay, price is coming down and this is a uptrend, right? So every time this uptrend hits here, it goes up, it hits here, it goes up, and it must be filled 90%. Price must go back to its original place, then it will decide from there whether it's going to reject and try going up and making new highs, or go to the bottom, right? But then this structure, I knew it just had to be filled 90%, just 90%, guys, not the whole thing, 90%. But it's not always a guarantee. It's not always a guarantee. But because I learned this at Falcon, the Falcon Academy, yes. So I was expecting, okay, it's going to fill up 90%. And keeping that in mind, I also, saw here, I'm like, okay, I know that there are two possibilities then if price is going to get you. It's either it's going to be, let me just hide this. It's either it's going to be rejected. So also, you see this, guys, this trend line, right? It's a buy trend line, and this one is a sell trend line. You see, price is on top. Price is on top. Every time it bounces, it goes up. Every time it bounces, it goes up, right? And here, price goes down, bounces, goes down. It bounces, it goes down. Bounces, goes down. So every time we see that, we always expect a breakout, guys, on the third touch. Like the third touch or the fourth touch, you must expect a change of direction, right? And we were able here to get a rejection 3 times, and we'll also be able to see price candlesticks becoming thinner and thinner and thinner. And most likely, when you see thinner candles happening, guys, it's going to go a certain direction, right? A certain direction heavily. So I'm considering this 90% rule, right? I'm considering this 90% rule. And what I'm basically saying here was that I want a weaker dollar. Based on what? Look at the momentum that it went up with the last week. Like it really shot up, guys. This is a impulse, an impulse to the upside. So every time there's an impulse, always expect price to just correct itself a bit, because it's just it'll be ridiculous for it not to like just come correct itself a bit. It needs to make sense. It's like imagine 1 rand, like 1 rand 10 cent going to 2 rand, just jumps to 2 rand, and it takes time. It never goes back to like 120. Understand? It must go back to 120 or 130 at least. So that now you can prepare and be like, okay, I know that it's going to get expensive now. So I'm expecting it a 90% fail, and also understanding that this is possibility of a correction and trying to make a higher low, which on the higher time frame you'll be able to see it properly, you understand? So it's trying to make a higher low before continuing to the upside. And also keep this in check, right? Keep this in check. So price came down, and I said to myself, all right, so if price breaks through this level here, it's going to the upside. It's going to go to the upside and probably continue going to the upside, and this would have just been a swing, of price creating a higher low and continuing to create higher highs, while still keeping in mind that 90% of the structure needs to be filled, right? So now, just for you guys to see a clear picture, I'm going to go to the smaller time frame, right? And I'm going to take out, wait, let me take out this. Yeah. And I told myself that if price is gonna break this structure here, my stop loss will be, well, I'm basing my stop loss on this, right, on the second touch. And also you just gotta always put it a couple of pips at the top of the candlesticks, because sometimes you just might get wicked out, then it goes your direction. And as you can see, the dollar was able to lose some weakness, some strength, then it gained strength again, then it lost it, and now it became weaker. It was weaker. Look at where it was, at where price turned around, like this level of 91,522. So guys, with trend lines, just quickly before I forget, keep in mind they always need to either touch the low or the body, but it needs to be around the low, guys. So the more it is touched, the better, right? So this would have been better ideally for me to put it here, but because I'm experienced and I understand that a touch is a touch, it touched, guys. And also it's also important how it touches as well. So this could be a false breakout, right? A false breakout. And then look what happens here. It touches it exactly, right? Then we could have went to the top with it perfectly. So always keep in mind of that in terms of trend lines. Like they need to touch the wicks, the lows, right? So now price went up, strong dollar, then it gave us a third touch on this resistance here, right? So we forget about this resistance here at the top, right? We look at the previous resistance that is close to the current market at the time, which is going to be this resistance here, this high here, right? Then there was a second touch, and what happened after the second touch? It went down and created a double top. And what happens when double top happens? We know that it needs to reach the neckline, and it's going to push down, retest, proceed to the downside, or for some odd reason it might proceed to the upside. And luckily the price eventually filled 90% of the structure here like predicted. So I would like to believe that this is the new support structure and it's the higher low. It's like the higher low of the swing of the swing, right? So from here we would love to see the dollar going into new highs. So with structures like this, right, I took a loss on GBPUSD based on this here, right? And let me show you what I did. So your man, I don't know why I did that, but I did it. I bought GBPUSD. I bought it, right? And I was buying it like, let me see. Let me just go to GBPUSD and tell you, but please just keep in mind the structure of what happened, right? Dollar went down, went a bit up, and went down. So most of the week it was going down, but at the end of the week, which was on a Friday, it was able to gain a bit of momentum to the upside, right? So now we go to GBPUSD. Where you're gonna properly see, yes, you see. So now looking at the structure, right? It's in a channel and it has a first touch on the resistance, second touch on the resistance, 1, 2, 3, 4 touches on the support. So we know every time it's either the third touch or the fourth touch, you must expect something different to happen, right? And for me, when I saw this, right, let me just go down to have a proper clarity of what's going to be happening, right? So as you can see, price hit here at the top, which was the resistance, and it respected it, right? It respected it, coming to hit here, right? So like I said, there's always two ways about it. There's always two ways about it. It's either it was going to come here and test this resistance here and go to the upside for a third touch, or it was going to break out, retest, go to the downside. And that looks like that's what the market did, right? So you remember when the dollar was going up, this is the dollar going up. So basically that 90% fill would be me trying to fill this thing here, trying to fill this one here, right? And it filled almost 80 to 90% of it. 80% you would say, right? And what I told myself was that, what did I say? Yeah, you see now here price came here, then price came up. It did a head and shoulders. Did a head and shoulders. And this is me looking at the current market. So you'll probably understand better from the lower time frame why I did this. Then another one here. So in seeing this, guys, I knew that, okay, I see the market going up, doing the right shoulder, then coming up, passing the neckline, retesting the neckline, and proceeding to the upside. Since I saw that, okay, look here, it retested, it broke above, and it retested. I was like, I'm going in for the kill. And it was 3, 2, 1. And what happened? I was in profits. That's when the dollar was now, we're gonna go back to the DXY to show you, right? And this is what was happening. This is basically what was happening. This. I mean, it going, yeah, you see, it was this happening, it going. When it was going down, this is going up, right? And as you can see now, it's going down. And when you look at it there, what do you see on the DXY? It's on the up, right? So let me just go to the 1 hour that I used to enter trades. As you can see, I predicted it. Look at that white line there. Look at this orange line. Let me do it for you guys. Look what I said. Look at it's gonna come down, come down, come down. Then it's gonna go up, retest, go to the upside, or go up, hit here, go down. You know? But it was able to present itself earlier. And I was like, ah, good shot. I'm gonna enter here. And what? Risk 3 to 1 risk to reward. Right? So for every 30 pips, I must gain 90 pips. And it took me out, fortunately. Then after taking us out, I made sure to put in a sell, right? A sell, to be prepared for a sell, like I said, if price has to reject at this price. And look what happened. It did reject, but it didn't reject there. Look where it rejected. After going up, coming down, and retesting here. So now, if unfortunately, by the time that happened, I was already in multiple trades. Like I was genuinely in multiple trades. So my leverage, I used like most of my leverage. Well, leverage that I felt like I was safe to use, right? So I ended up missing on this trade. But as you can see, it ended up hitting this line. So this, it turned from resistance to support, from support to resistance. You see, came back, hit it here. Then me, I put my target here, saying that I want to enter around here. If it has to like go to the downside, as you can see, because this is a correction. This is a correction. If we go to the higher time frame, like properly show you, it's a correction. You see, it's going down, it's going up. It made its higher low, then now it's going to make its lower low. Like it's going to make its lower high, then it's going to make its lower low, then make its lower high, then go its lower low. Hopefully it will cover this whole structure here, probably until around here. You understand? Around here. Based on that, look at the DXY. Let's go to the DXY. Based on that, look what's happening to the DXY. This is the same head and shoulders. You understand? This is a head and shoulder formation. Look, here's the left shoulder. Here is the right shoulder. So now we could expect, after it hitting this support like this, we could expect it to go to the upside. And looking at that, it supports it here that okay, the dollar is gaining strength. And by next week, when the market opens, this could be the trade we could be getting into for a sell, right? And GBPUSD, just trying to, I don't know why it does this phone. Yeah, man, like I literally got triggered on this. Just trying to make sure that it's the proper thing, you understand? Because I did enter manual trades as well. Let's see, 13954 39549. Let's see. So I entered a bit at the top, So I entered here, right here, yeah, which is great. I entered right here at the top, so I knew when it went up, it would break me out. but it ended up in a loss. But I'm not complaining. I am not complaining. So what I could have done better, honestly, was put a buy stop, because it seems like I entered it manually. You understand? So could have done this, put it a bit below here. Yeah, put it here. Well, actually, now put it below because I'm entering it here as it breaks out. Then that would have been all right, man. It would have been close to. It would have been like I risked 1% to earn like 2 comma something, 2 comma something percent, right? Yeah. So yeah, I'm not sad. And plus here, I didn't set a buy stop or a sell stop for this, so I'm not in this trade as yet. So GBPUSD, it wasn't good at all. It wasn't good at all. And EURUSD, go down. Also, two possibilities, and this is the one that I caught wonderfully, right? I'm even going to show you guys here. I'm still no, I exited the trade recently. Euro 19202. Euro 19202. And then see where the stop loss was. Stop loss 19384. 19384. Let's go to 15 minutes, because yo, it looks so. Oh, okay, I see what happened here. This is when I pushed it to my um entry level, close to my entry level, right? Close it to my entry level. Okay, let's go back. Let's go back. But yeah, man, as you can see, this was expected, man. Like, if it had to go to the upside after here, right? This is a head and shoulders. The reason I took it was because of the head and shoulders, and I took it based on the breakout here, you know. And I was in profits, guys. I was in profit. Go to like $5 in profits. I think $5 to $6. But then I wanted it to hit my stop loss, because I don't like. I think it might possibly go hit my stop loss, because that's the plan always, guys. Like, when you're doing these things, like, your plan should always be to hit the stop loss. Like, your stop loss needs to be hit when you starting out your trade. Like you said, I'm going to buy it, or I'm going to sell it until it hits this position. You understand? So for me, I went out this trade, and I feel like it was a good trade. It's a trade that I would take on any day, because I'm using a pattern called head and shoulders, which it's a breakout one, retest, then go to the upside. But as you can see, it retested, then just went slightly to the upside, and it is rejected on this level here. So, and this is looking like a correction as well, you see? Correction, 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 a wedge correction. So it might be continuing to the downside. Sorry for making it so untidy. Let me just, but as you can see, guys, like, for me, I can't complain. There's nothing wrong about this trade. There's nothing wrong, honestly. I'm happy about it. I was in profit, and we were able to prepare for both sides. So I'm not disappointed at all, honestly. I'm happy because I was in profits and I gained profits. Even though the unfortunate thing is that I had to just manually take profits, because as you can see, it's rejected, and I don't see it probably pushing up to here. So we will see next week. I'm comfortable with taking my profits, my small profits, and it's okay. I'm not trying to be greedy. It's good. I earned profits, guys. I earned profits, which is good. You don't always, like, we all aim for, like, maybe saying $15. I want to aim to get $15. You're not always going to get $15. Sometimes you get 10, sometimes you get 5. But it's the fact that you got the profits, and also you understand why you got out the trade manually. I got out because I could see that it was struggling to pass this highs here. It was struggling. And looking at, I could have entered from here, imagine, from here. And looking at that, it just gives me confirmation that this price wants to come to this level here, you know. So I have a thing of looking at the correction. I wanted to go to the downside. So when I do the analysis, we will see what we see, right? But for now, I'm quite happy, and we just might be looking for sales, as this is a correction, as you can see, correction. Good trade. EURUSD, good trade. USDJPY was a bad trade as well. Let me see. Oh no. Yes, I did take USDJPY trade. As you can see, I have a Fibonacci, right? So if Fibonacci, you use it to, like, you start from the low, like, oh man, what I'm doing. You start from the impulse. You see, this is where price impulsed until I mean, how did I do this again? Sorry, just trying to make sure. Oh yeah, I started from the top going to the bottom. Then I was looking for price to, like, come hit a 60 here and go back to the downside. But as you can see, it never did that. It continued to go to the upside, and I was prepared for it here. As you can see, that it was going to come here, go up, break through, come retest again, and go to the upside. And let's see if this is the one that I placed the buy stop or buy stop order with. 192 248 also until at 248. 248, and my stop loss was 564. Whew, crazy, guys. But wonderful. Let's see properly. Oh yeah, see, it took me in. I wonder how. I feel like I was impatient with it. No, I'm lying. You see, guys, I made a mistake. Sorry. I was basically going to sell it. I sold because I was thinking of a weaker US dollar, based on the fact that it was here. As you can see, I even made a circle here. I thought it was gonna come here, but it didn't. It just ended up, yeah, it just went to the top, guys. It went to the top, and that shows that I probably need to go back and learn more about my Fibonacci, you understand? And I'm not ashamed to say that I am wrong, as it happens. And yeah, man, just went up. But what I dislike about how it went up, right? I don't even want to take this trade in a way, because it doesn't look like a, it looks like a trade I would take, but it just, there's so many things about it, man, which are, firstly, it's not touching, man. Like, I don't want to force this thing and put it here. You understand? I don't want to force and put it there. But then if you do it still, wow, it just rejected here, never touched. Then it went to the top. So it is so annoying that it did that, because if it had touched here, I would have gotten properly in the trade, right? But it didn't. Instead, it went to the upside, and it knocked me out. Honestly, I don't have much to say about this. Honestly, I don't have much to say about this. because also I was expecting it to come here as well, to go to the upside. And as you saw earlier on, let's just take it back to the beginning. Yeah, there it is. Take out the rest. Take out the rest. You see this? Could be happening here. This could be a head and shoulders. If you look at it, look at this. Could be a head and shoulders happening, right? So it could go to the top, but the only problem with that is we're in a channel that broke out of a resistance like channel. So we're in a channel that's within a channel. As you can see, we're in a channel. We're within a channel that's in a channel. A channel that's in a channel. You understand? So as you can see, my plan was that if we broke through it, and we would continue going up, I would hold it until we got here to this level here to get our, I know I said there's a touch, there's probably our third touch, as you can see, to get our third touch here. But by how things went by during the week, guys, this thing, the US dollar just gained some strength and just slowly started losing a bit of, or again losing a bit of weakness. So this could end up going to the upside. Could end up going to the upside. Could end up going to the upside. But we'll see when we do analyze. But yeah, man, I took a loss on it, and I'm very disappointed in myself because correlation, guys, correlation is so important. And now we'll go to US30. US30, honestly, I just been holding since here, so it's very self-explanatory. Very self-explanatory. Yeah, man, like now we're filling up this whole thing here, right? This whole price action here after we've made a false breakout. So look how it is here. So I wish I could have taken it from here, but it's fine. I took it from here when it was doing the head and shoulders and making the higher low, higher high, higher low, going up. And I believe it's going to come and hit here, guys. It wants to come to hit here because it's been a long time, and this is the highest high, which needs to get its second touch, and hopefully it will break through. So yeah, man, I was here. I just used higher, higher, and low to enter. Just 1, 2. Now that I'm going to enter on the break, and that's what I did. My second entry. That's my second entry, and this is my first entry. This one is still in profits. So we are good with US30. We're still going to hold this. We are still going to hold this. So for me, guys, looking back at the analysis that I just did now, I would say that like where I went wrong was USDJPY, right? Let's see where I went wrong, and also GBPUSD is where I went wrong, and I could have done way better. But also I was able to take EURJPY trades, guys. Like, where did I take it from? Like I took, yeah, it was here. I took them from here. And this is something I didn't analyze on the previous one. I took them from here, did this, and I entered it twice. I remember I entered this twice. How much was I able to make? Let's see. Off of it, EURJPY, like I entered twice, right? So the first one, it hit my TP. I'm gonna just go do it here for you. 131, 132, 132, 221, profit. So yeah, I was able to take this trade and it was able to hit the profit based on this was the level that I expected it to go to, you know? Like if it had to break out, because if it had to break out here, the structure here, it would come here. And also, there's the one I took here. I'm gonna show you guys. There's one that I took that was great. Telling you. I just need to another one. You see where I entered? I entered here. And my stop loss was around here. And when did I get out? 132, 370. That's how I was able to get out, you know. So I had both of them running at some point, and this one helped me when it was going through just this like the minor withdrawals, like from the lower time frame. Like you see, it broke me, I went in, then it came back down. I was able to stay confident because I was in profits here and I had locked the profits. Like I always lock, guys. You see, price went up. Probably when it got here, I put it around here below, like here, by this candlestick here, based on the fact that you always, it's like the stop losses. When you put in a stop loss, you want to give it space because you don't want it to wick, and then after wicking take you out, then it's still going to go hit your take profit. So just put it below by a couple of pips so that if it does wick, it's going to miss you and continue to the upside to hit your TP, right? And I think that one, the second one, I took it out. This one I took out manually. This one hit the TP by itself. So as you can see, most of the pairs that I was trading this week, it was the head and shoulders formation, guys. Like it was the head and shoulders formation, you know, head and shoulders, head and shoulders, head and shoulders, and it won't always be clear, guys. It won't always be clear. You understand? It won't always be clear as this, because a clear one is like this, head, and it does that, and it does that, and it does that, and it does that. Then you use this as your higher low, as your swing, then you would put your stop loss here, and it's either you're gonna enter here, or you're gonna wait for price to come here, enter here, and it's gonna hit you with a breakthrough, or you wait for a retest to come to this level, then you're gonna take it and go to the upside with it. But sometimes this might not happen. You see what I'm saying? It retesting might not happen. It might just continue shooting to the top side. So with EURJPY, we were able to make good trades, guys. And I would say, how much did we earn? We made a $20 profit this week, all in all, because we took also gold, and gold was like minus 13.52, which I didn't put a stop loss on it, you know. I just saw an opportunity that I'm used to. Like as you become better, guys, you're gonna be able to see things with your eyes that are very like easy to notice, and you know the patterns. It's just that I don't know what distracted me that day for me not to put the stop loss, which is the number one important thing. Like guys, if you don't put a stop loss on your trade or a TP, I feel like you actually don't know what you're doing. And I could say that for myself as well. I don't know what I was doing here, you understand? But it happened, and it's something that I need to write down and make sure that I do not repeat. And what I do, for me, luckily, because I record videos, I watch these videos all the time, guys. I watch these videos, I sit down, I watch, I see how I analyze, I see where I went wrong, I see where I can do better. And I just have a journal as well to just help me articulate the specific things, right? Just to be specific, so that sometimes I may not be able to go watch a full video, right? But I was able to write down notes and all that to help me know what information I want, right? But all in all, for me, it was profitable, guys. It was very profitable. It's just that we took stupid losses on on gold, two losses and one. So we took how many trades? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades. And out of 13 trades, we 1, 2, 3, 4. We lost 4 trades. And one trade, um, 2 trades were 1%, which was the USDJPY and the Euro and the GBPUSD. But the gold and the yeah, just gold by itself, I wasn't able to secure it. It's 1%. So instead of me losing 1%, I ended up losing like 3% or more, which is very bad, very bad, very bad. And I don't want to see myself repeating the same mistakes next week, guys. So I hope you guys were able to see how I trade and how I went by trading this week. Please do comment down below with what you would like me to explain even further, and I will genuinely help you. Just go on my Instagram and DM me at FXmosako and DM me, and I will definitely help you guys. And also, just tell me how you would like me to, make this content way better for you guys. And are you guys able to hear me? Am I going too fast, or am I, like digressing? You know what I'm saying? So just tell me how you feel about the lessons. And yeah, man, let's eat, let's learn, let's correct, and make sure we do not repeat the same mistakes we did this week, next week. And next week is gonna be way better. It's gonna be way better in terms of the analysis. So please prepare your books next week, guys, as I'm going to do it like I've been doing with my previous videos. As right now, guys, I'm trying to really honestly manage working and doing this, so like I don't get enough time to prepare this stuff. So it's me just now like getting on my laptop and looking, just giving it a quick scope and looking at the trades that I took and just telling you guys where I feel like I could have done better, but from next week on, the videos next week, I'm going to prepare them for you guys and write down what I see and what I tell you, so that also these videos aren't that long, because they become long because I also, you know, be freestyling there and there, So yeah, man. Hope you guys find it valuable. Please do watch the analysis, as it is very much so important. Check you guys in 2 days time. Peace.